everyone. Back to another episode of Make Money Count. A lot of things happened today. We were actually going to record this on Friday, but we thought it only necessary to push it up to today because today something big happened. The Bank of Canada raised the key interest rate by 1%. And we have our lovely friend Marcus here, who's like coming in live from Greece, who I'm sure has a lot to say about this.
It's weird, right? 1%. That's a big one.
It's a lot.
So you know what the prime rate's going to be, right?
4.7.
Yeah.
That's crazy. When's the last time that happened?
I was looking at that. Do you know how high the prime rate got once? Not the overnight rate. So the prime would have been higher.
Like 80s style.
It was September 1981.
Yeah.
And it hit over 19%.
That's crazy.
The overnight rate.
But hopefully not happening again.
And at the time, like the economy was broken. Right? And right now, the economy's broken. We broke the economy. Right? Like our response to COVID led the way for an entire dismantling of our economy. You remember how like the government was telling us like, don't worry, we got this under control. We're just going to give everybody checks, lots of money to stabilize the economy. It's not going to create inflation. It's just going to keep things going. Otherwise, it's going to be a big problem. Well, so uncharacteristic in a situation like that. But the government's actions actually made things worse.
Yeah.
And we're not going to know the full effect of it yet. We're going to find out soon enough. But like all of this talk about, we're going to have a soft landing. So we've like all of these conversations we've been having for the last couple of years now, right? Namely the inflation chat and the probability of this leading to a soft landing. And it just now is starting to kind of reappear. Like there was a good quote that the Tiff Macklin, the governor of the Bank of Canada had, where he said, the path to a soft landing is now somewhat more narrow.
So are you worried that the soft landing doesn't exist anymore?
Well, I from the beginning, there was no soft landing. If you increase interest rates the way they're increasing interest rates, there's no soft landing.
Right.
Inflation numbers, though, are so red hot. Mm-hmm. Like so two things happened today. When you were talking about like big news today, there's actually two things that happened. And more important even than the 1% increase that the Bank of Canada posted on the overnight rate is that the United States booked an inflation reading of 9.1%. 9.1, I wrote it down. Yeah, 9.1%. So like things are still really hot, right? The Bank of Canada thinks we're going to see 7% inflation into 2024.
Yeah, that's crazy.
So like we're at 4.7 on prime right now. I didn't think it was going to get this bad. I honestly, I think for sure we're going to see 5.7 on prime. I think we're going to see kind of from now on, I think we're going to see 25, 50 basis point hikes, not like another 1%er, but I think we probably see another 1%er out of the States.
Right.
I think it slows the American economy down. It slows the Canadian economy down. It's windy here. I don't know. Can you hear how windy it is?
It is definitely windy.
Yeah.
It's okay.
Well, it's Mykonos. A very windy island.
Is it? I've never been. Yeah. Maybe it's time to check it out.
I don't know. I don't know anybody with a place here, so I can't help you, bud. Can't help you, bud.
The last time we did a podcast, I had asked specifically if Canada always follows suit with the Feds, right? Like the Bank of Canada follows suit with the Feds.
Yeah, pretty much.
But
I did listen. Right now, we got to.
Yeah. So let me ask you, Marcus, like, do you think that they decided to go the extra 25 basis points higher than the U.S. because of the U.S.'s announcement this morning as well?
No. I think they did it because they want to send a signal to the market that they know that inflation's an issue and that they're going to act. Like we spoke about this last time, right? The market has lost confidence in the central bankers. Right? You can't have a reactive central bank. right? You have to have a proactive central bank.
Right.
So we've had a central banker that's been telling us all along inflation is not a problem, right? We've had a government, like, how stupid, right? The federal government, the Minister of Finance of the federal government decided she wanted to do a joint press conference with the Bank of Canada's governor. This is a while ago. Do you remember this? It's like a year ago, where they wanted to reaffirm that the mandate was full employment and inflation. Single mandate, but two things. It was really confusing messaging. At that time, what they should have been talking about is maybe, just maybe, this massive amount of money that we printed and injected into the economy could cause problems into the future.
Right.
And I'll go back to it. I've said this before. I'll go back to it. You know what would have solved this? Is if we spent the time to efficiently spend the money instead of just printing it and throwing it out into the economy. I mean, what would have helped, first of all, is not shutting our entire economy down for 2 years.
Right.
Anyways, I think we're in for pain. I think, all of the, like, you're going to see it right away. You're going to see it in the consumer lending stuff, right? So like Affirm, which Justin is a
key
shareholder of, it's getting crushed. Honestly,
I didn't even look at it.
That's like, it's like the buy here, pay here, like chop up the installments.
Yeah.
Like the crack cocaine of consumer lending, right? Don't worry about your credit score. Don't worry about your income. Just like buy stuff online and pay for it in installments. All that type of lending is going to have a really hard time going forward, right?
Right.
Because their cost of capital is increasing, their margins are shrinking. They're going to have to increase the cost of capital of the consumer, and the consumer has less money in their wallets now, right? Like, let's not forget, the Bank of Canada is not responsible for Putin invading the Ukraine, right? Nor is the chairman of the Federal Reserve. So there's external factors that are driving up the prices of everything. And we've spoken about this at length also. I think, like, if you're Canadian right now, you definitely want to be careful about any big decisions, right? I think like we're going to see property values continue to drop. We've already seen them drop.
I have a quick question here.
Yeah.
I have a quick question. This is interesting. Like you could pick out like if I was to pick out a hockey team, it would be like Wayne Gretzky, Mark Messier, Patrick Waugh, and Net. You know what I'm talking about? Who'd
be your roster? Who
would be your roster for the government right now to figure this out as quickly as possible?
Wayne Gretzky, Mark Messier,
and Patrick Waugh and Net.
Yeah. No, okay. Who'd be my roster? I don't know, man. I wouldn't put you anywhere near it.
Definitely not Matt.
I mean, like, Matt could handle the technical support for sure.
Maybe not today.
Producer Matt. Hey, by the way, do you see that full moon?
Yes.
Boop. It's like right on the top of my finger. Boop. Okay. Who would be? The problem is like we speak about this too, right? It's like the way that the government is set up. We're voting for people in a popularity contest to get them into power, and then they have 4 years to enact some real change. But like naturally, they just want to get reelected, right? So their behavior is such that it's like, again, like quick, stimulative things to make people happy, so you would need people that didn't really care to be reelected almost, right? And people who had a vision that would say like, I know what I'm going to do is going to be harsh, but I know that I'm going to leave things better off, and I hope that it happens within my 4 years. But if it doesn't, that's okay, because smart people are going to understand in the future how I was helpful. The other issue is, like, don't you kind of feel like politicians almost have contempt for us? Like, they're like, people, they're so stupid. Like, just tell these stupid people the bare minimum and like, let's push them through it. Like, Just listen to us. It's almost as if the politicians, in addition to being really focused on like temporary gains in order to maintain power and keep, keep control, that they have like contempt for us, like for Canadians or whoever their electorate is. And like, they don't think we're that smart. They don't think like the populace is necessarily very intelligent. And they behave in such a way to kind of force us down like cattle, like just do this and do this next, put the mask on, take the mask off, get the vaccine, don't get the vaccine, take a stimulus check, give us the stimulus check back, right? So I think that if we were to find people and elect people who, number one, didn't think that the populace was stupid, like gave people credibility.
Right.
And gave people kind of the benefit of the doubt, I think we would end up in a much better position year over year. Like, I think, like right now we're going to have a problem.
Right.
So who would I put in power? I'd probably put in like successful business people that I know.
Right.
I would put in people that, like, I think you need to focus. We talked about this too, right? You need to focus on education. You need to focus on equality, like equal access to stuff, so that like poor kids can get great education, right?
Yeah, 100%.
You need to focus on healthcare. Ours is not so great right now, even though it's free. You need to like make things stable, and then you need to focus on how you're going to regroup your economy, right? Like, our economy right now is so focused on real estate. Real estate's going to get smashed.
Right.
Right? Like, real estate's going to have a problem.
Right.
Prime rate's going to be 6%.
Yeah.
Right? Variable rate mortgages are going to be 5%. There's going to be a lot of people taking second mortgages.
Mm-hmm.
And the runway on this isn't forever, right? It's not infinite anymore. The runway is now shortening. Like before, property values were jumping up because interest rates were low, so asset prices rose. So you could borrow more money at cheap rates and continue to fuel this bubble.
Right.
Well, now that's been pulled back.
Right.
You want specific names of who I would put into power?
I was thinking like
my buddy Gene McBurney, I'd put in there.
Yeah. I was thinking like previous elected officials, like Stephen Polos, Mike Harris. Maybe not Mike Harris. No, he was the Ontario premier, wasn't he?
Mike Harris, yeah, he was Ontario premier of Ontario.
Yeah. My mom doesn't like Mike Harris.
Yeah, didn't he sell the 407?
I'm not sure. My mom works in healthcare, so she's not a fan of Mike Harris. Sorry, Mike, if you're listening.
And I think he ended up starting some type of healthcare company too.
Interesting.
I know he lives in the Bahamas now.
Oh, does he?
Anyways. Well, like part-time, yeah. Yeah.
Right. So
he's friends with a buddy of mine.
Interesting. So with prime rate raising, the ultimate question is, of course, are we still fans of variable rates? I mean, I have a variable rate. I'm happy. I'm not going anywhere.
Me too, man. Me too.
Holding
white
strong.
knuckle it through this.
Yeah.
How about this? I still think rates are going down at the end of 2023.
I agree.
Yeah, 100%. And like a lot of my I don't know how to word this, but some of my clients who, have a history in economics and all this stuff has been saying the same thing. 2023, at the end of 2023, like people are jumping on 2-year rates kind of thing right now. Just, knowing that in 2024, it might be a good time to come up for renewal again, right?
What's the 2-year rate?
Oh, don't do that to me.
Matt has a computer in front of him, right?
That's true.
Let me see if I can try to find that out for you.
Usually the best 2-year rate is MCAP. That's where I go for my 2-year rates, I would say. I don't know if we could put that in the podcast.
Why not? You can put it in the podcast.
Yeah, why not?
I honestly, I don't see it's going to be that much better than a variable.
Right. No, of course. I'm just saying, B mortgages, stuff like that. I'm just saying, coming up for renewal in in July 2024 is going to be better than coming up for renewal in July 2023 is what I'm saying.
To get a fixed rate? What are you talking about? If you're in a variable rate, what's the difference?
No, yeah.
And you know what? Actually, think through that, because if we go into a recession, the spread on the variable will get tighter.
Right.
So like prime, like you remember, like variable rates, the discount from prime is predicated upon the economic certainty amongst the banks. But what we may end up seeing is that spread tighten if the banks kind of trust each other less.
Right.
Right. It's based off of the interbank lending rate. So that, I don't know. We got to think through that a little bit. I do think, though, that banks are going to become more profitable with higher interest rates, right? Bigger spreads, more yield, net interest margins increase. So if they want to get competitive for business, they might be able to extend that discount.
Yeah. So I think we'll start seeing prime minus ones again.
Yeah.
I mean, there is prime minus ones right now, but you know what I'm saying.
Yeah. Okay. So like maybe you might be able to get a prime minus 120 discount, but until only the point that, like, if we go into a serious recession, then you'll see those spreads tighten.
Right.
You'll see those discounts off of prime not be as great.
Interesting.
Listen, I think we got a problem, right? Like I think like we keep seeing interest rates rise. They're going to rise another 1%. Because the Bank of Canada wants to show us that they're going to be tough on inflation.
Right.
And it's in the middle of an economic situation where the consumer's already tight.
All right. Listen, Marcus, give us 1 minute. We're going to cut to one of our commercials, and we will be right back with another question.
The level of competition in the market is between the mortgage finance companies.
Absolutely.
Mortgage finance companies are setting the market for rates, and then the bank picking and choosing when they want to compete. But I'll tell you one time they never compete is with their existing borrowers.
Yes.
If you are an existing client of a bank and you're in a variable rate mortgage, you will not receive a competitive bid on a fixed rate when you're converting unless you show that you're shopping. And even then, they're aware of the fact that you're going to be paying a penalty to break. If you have a mortgage, you want to probably call Cannect just to feel out the situation right now. If you have a mortgage and you're sitting at home and you're like, geez, is inflation an issue that I have to worry about? Let's talk through it. We've got a tool on our website that can tell you how much you can borrow using your house and what the price is. It's the only tool like that in all of Canada. You go in, you enter in your address, you say, I want a Connect Flex loan. You get a price, you download it, it's approved, we fund you in 24 hours. Nothing like that.
We're back. Marcus wanted another question, and this is a question that I'm getting a lot from clients right now, and we're seeing a lot of media coming out from a lot of the lenders, especially the big banks, about this. So what generally happens in a situation like this when you're on a true variable rate and your payment is not changing? Like, is this a cause for concern for those people, or?
I mean, you're not amortizing your mortgage anymore, right?
Right.
Like you're reducing. If your payment isn't changing, more of your money is going to interest and less of your money is going towards principal.
Right.
And I mean, it depends. Like, is it a problem? If you're on a fixed income, it's a solution, right? Like, so what? You're not paying your principal down.
Right.
What if you can't afford more of a monthly payment?
Right. Of course.
Right?
I mean,
there's all this talk about like, sorry?
I was just going to say there has to be a breaking point though, right? Like I know that right once you're in like that negative amortization space, right? Is that the right term
I mean
for
like
it?
Yeah, negative am. Yeah, for sure. So like where you're accruing
exactly.
interest on top of your principal because the amount allocated to your payment doesn't cover the interest that's owing on it.
Right.
I've never seen that happen before. And trust me, I bet you there's a provision in the standard charge terms of the mortgage that says that the rate resets in that case.
Oh yeah, for sure.
But you got to think like it's already roughly double, right?
Right.
So, you know, if you had a 1.5% variable, you're doubled now, right? Yeah, like you remember March 2020, we were like hammering the phones. We had prime minus 120, like, and we were like, you got to get these because they're all going to change.
Yeah.
And then economic instability creeps in, variable rate discounts shoot the wrong way on people. They shrink because of the uncertainty.
And then they ended up being prime plus, depending on what lender you were looking at.
They went from prime -1 to prime +1. Yeah.
Yeah. And you asked if I remember that time. I specifically remember eating a burrito on my couch with my laptop, and we had sent out an email for clients to give us a shout to lock or to break and move to a variable rate. And I think I had something like 350 emails, and I did Saturday, Sunday, like 14 hours just calling people from my couch. It was wild. But we helped a lot of people.
Yeah.
Yeah. I think everyone did the same thing. Meaning.
Yeah. Josh. Remember Josh? Remember how many calls Josh made?
Yeah.
Shout out Josh.
for everyone that's not listening, Josh was flying that day, and he said the wind speeds were too fast, and he couldn't get back to the airport. Yeah, for everyone that is listening, that was what he said. The wind speeds were too high.
It was a windy day. It's a windy day here in Mykonos today.
Yeah, it's windy there. Yeah.
So honestly, what should people do is where we're kind of coming to. If you're thinking you need to get equity out of your place because you have debt, you absolutely need to do it now.
Right.
Because your house is very likely to decrease in value by a non-trivial amount.
Right.
Right? We sounded the alarm bell on this a little while ago.
Yeah, no, 100%.
It is going to be a little bit stressful. You know, you can hear it, right? Like you can hear it when the central bankers are talking. They're telling you, we no longer care about whether we're going to start a recession or not.
Right.
Care about getting rid of inflation.
Right.
Right? Inflation is scarier than recession. Big time inflation that like creeps into an economy. Like, look at the reactions, right? Like, look what we're willing to do. The president of the United States is traveling to Saudi Arabia, the country he said he would not go to, and a leader he said he would not meet, and instead he was going to turn him into a pariah. I think he actually said, I'm going to turn MBS, that's the guy in Saudi Arabia, I'm going to turn him into a pariah for what he did, the killing of Khashoggi. And instead, he is going, I'm sure he's not crawling, but he will fall down the stairs of his airplane. He's crawling to Saudi Arabia. He's crawling to Saudi Arabia to go and ask them to increase oil output so that we can reduce the price of gas at the pump.
Right.
I don't know. It's just you can tell that the global leaders are worried, right?
You would think that America has enough oil themselves, no? I mean, we definitely do.
The problem is energy policy has been so perverted over the past 10, 15 years, right? The idea of like, we're going to focus on renewables and there's going to be enough renewables to run our economy. So let's not damage the earth. It's not sustainable, right? Like in the end, it causes problems with your foreign policy. So now we've got energy policy dictating foreign policy.
Right.
And we've created some real monsters, right? Like, yeah, the Americans have a lot of oil.
Mm-hmm.
Proven oil reserves, like billions of barrels. But like Canada has a lot of oil.
Yeah, no, for sure.
But we don't want to put a pipe. We don't want to create a pipeline.
Right.
So instead, we bought oil from Russia, and we buy oil from Saudi Arabia too. Listen, until we can reduce the price of oil and reduce reliance on it, we're going to have an issue, right?
Right.
And that's not going to get solved quickly.
Right. No, of course. Until everyone's driving a Tesla.
Even then, man, like, and everyone's not going to drive a Tesla. They're not going to be able to afford a Tesla.
Yeah, no, for sure. For sure. I mean, he's not going to be able to afford to make them anymore now that he's getting sued for $44 billion. Is it $44 billion?
That's right. Hey?
I think he has
Do you think that?
I think there's a clause where he can cancel the deal for $1 billion, which is 2.2%. You'd lose more if you walked away from a home sale.
That's right. You know, Matt, I was reading this article about that, and it's a lot like a home sale because the exit that he has is a financing condition.
Yeah.
Oh, interesting.
So he's basically got a financing condition on it. But he said that he was going to pledge $35 billion of collateral. So it's almost like a financing condition with some specificity. So he's kind of like outlined, like, if I can't get a loan on these terms, namely like this is how much I'm going to put up for my loan, then I'm allowed to back out of it. But then I was reading that like maybe that financing condition is he will not be able to use it to back out of it, in which case he could be sued to complete the transaction. But it's kind of like buying a house.
Yeah, I was reading an article today that like anyways, talking about like his tweets. No, it was talking about how his tweets were going to be the main, like all his very confident tweets about buying Twitter was going to be the.
Yeah, I think Matt's right. I think he probably he's on the hook for $1 billion.
That's a lot of money.
And whatever. For him, it's pocket change, right?
Yeah, like I said, it's 2.2% of the purchase price. That's nothing for a guy like that. 2% to walk away,
nothing, man. It's still $1 billion.
Yeah, I mean,
but yeah,
I'd love it.
What does he have? 250? What does he have? 250 billion? What's his net worth? These increases are, like 50 basis points in April, 50 basis points in June, 1% now in July. Like, these are going to be shocking to the market. And then like a lot of this information that we heard, like jobless claims are way down. Canada's got the, lowest unemployment in history. But if you look at those numbers, it's because people have left the job market, right? Like people who previously were looking for a job aren't looking for jobs anymore. That's a problem.
Yeah, no, 100%. I mean, they were living off government cheddar for so long, right?
It's no good. This is a no bueno situation, JT.
It is no bueno.
Listen, like I said, property values are going to drop. If somebody needs to borrow money, you got to look at doing it now.
And when do you think they'll come back? Like, is this a forever thing? Obviously not. Like as soon as
23rd, 2025.
Perfect. You heard it here first. But I'm saying like after the interest rates come back down, like how long of a lag after that do you think we'll see? Or you can't answer that?
It's just too many variables, right? Like I think that interest rates come down in order to re-stimulate the economy. How quickly does the economy get back on track where people are reborrowing to purchase, right? Yeah, I don't know, man. I think honestly, I said jokingly 2025. I think that's, it's probably like 3 years from now that we'll start seeing the real estate market turn back into a positive direction if all goes well.
Right. June 23rd.
Right. So figure like if they're talking inflation until 2023, 2024, and we think that inflation will give way to recession by 2024, which means accommodative policy, which means lower interest rates, and then lower interest rates to re-stimulate. Then 2025, people start buying, getting back into it kind of more heavily, and we see property value. But like, there's so many things that can happen between now and then, right?
Right.
And who knows? Like maybe, maybe some other central banking trick that comes out of their toolkit. That who knows what else we're going to see them do. But I think that we're underestimating. I think the government and the central bank is underestimating the impact that a significant decrease in housing prices is going to have on the Canadian economy. And I think it's a mistake. I think that Canadians, like you got to understand, right? Canadians have to go bankrupt in order to default on their mortgage, right? They got to lose their house and then they got to go bankrupt. That's not a rosy picture.
Right.
And if we see a 30% drop in housing prices, which is not out of the question, many, many Canadians will be underwater on their homes. Yeah. So, I mean, like, what worries me is that, like, we don't know. Maybe we're underestimating what a 30% drop in housing prices does to the Canadian economy. Right? Because it puts people underwater and it really limits what they're going to be able to pay for. And it puts into peril car loans, consumer loans, credit cards. A rapid drop in housing prices is going to rock consumer spending. It is going to really, really affect confidence. Right? People aren't going to go out for dinner when their house dropped 30%.
Right, of course. Yeah, that's crazy. I do have good news.
It's weird to see. You know what's weird to see too? Is like right now, I'm in Greece, right? And there's people traveling and spending money like there's no tomorrow, like riding this past kind of fiscal wave. And in September, I feel like everyone's going to kind of get back to business and they're going to be like, oh no.
Right.
Not just Canadians, Germans, Americans, English, like every country in the G7 has pushed in a jumbo interest rate hike.
Right. I mean, you're
It's
in
going to affect things.
Yeah, you're in like the capital of recessions.
I am in
the recession
a country
capital
that
of the
has
world.
certainly experienced economic ship. Yeah.
Yeah.
But again, do you know how they experienced it? You know what they did?
Tell us.
So the Greeks had this habit of when a government was like a new government was coming into power, they would give jobs to everybody. So if like I was running to be the prime minister of Greece, everybody that was helping me with my campaign, everybody that I needed to go meet, jobs, I'll put you at the, ministry of this. I'll put you like Olympic Airways, which is a Greek airline that was started by Aristotle Onassis, was gifted to the Greek government. It was a profitable airline that was gifted to the Greek government. And then the Greek government, whenever a new guy would come into power, they would put like a couple hundred people there, a couple thousand people somewhere else. They would bloat the spending of the government to such a level where they needed to increase taxes. But they didn't really, because they wanted the economy to keep rolling. Again, short-sighted. Let's just get into power. Let's just get these stupid people to vote for us. Everything is going to be okay. And if it isn't, it'll be some other guy's problem. And then they needed to join the European Union to reduce their borrowing costs. And in order to do so, Goldman Sachs helped them fudge the numbers on their essentially income and assets to hide some of their debt. They joined the European Union, and then the European Union was like, oh, there's a really big problem with this country. And then they imposed these austerity measures on Greece. Like right now in Greece, the value added tax, like the additional tax on almost everything that you buy is 24%.
Wow, that's crazy.
Yeah, so it's like you buy something for $1, you're giving the government, you're giving them $1.24, and 24 cents is going to the government.
That's crazy. You caught me off guard there with your talk about Aristotle. I thought you were referring to the guy who was like born in 384 BC, but once you clarified that he had given an airplane company to Greece,
Aristotle Onassis, man, he was like a shipping guy from northern Greece who like lived in South America, married Jackie Kennedy.
Oh wow.
Yeah. Cool dude.
Interesting. And just for everybody like who just to catch everyone up to speed here, and we're not saying that this is our best, but the 2-year MCAP rate is 449.
I'm trying to think if I would take that. So we think prime is going to go to 5.7.
Right. And you got prime minus 50. So you're at 5.2 now.
Who's got prime minus 50? Wouldn't I get
saying.
prime minus 1? Why wouldn't you give me a better rate than that?
Okay, so you got prime minus 1.
Okay.
So you have 4.
So I'm at 3.7. I'm at 3.7 right now. And you're saying what's the M cap rate?
4.49.
That's nicely priced, eh? I don't mind that rate for 2 years. You know what though? I just worry that like 18 months in, we see a rate cut, maybe sooner.
Right. I
mean, I don't worry. I hope. I hope that we tame inflation. I hope that the price of things can reduce a little bit. But it's getting windy here.
It is getting windy. All right. Well, it's tremendously windy in Greece. And what time is it?
10 o'clock.
10 o'clock. So it's time for bed almost. So we're going to say goodbye. And if everybody who's watching right now can like, subscribe, comment, we'd really appreciate it. We look forward to seeing you next week. And next week you might be here in the flesh.
Yeah.
No? Yeah.
There's a chance of that.
Awesome. Well,
there's a chance of that.
I'll see you then.
Be sure to visit makemoneycount.com to find all of our old episodes. Be sure to rate, comment, and review on all of your favorite podcast platforms. If you want to send us a question, please send us a question to hello@cannect.ca. That's Connect with an A. If you're not already a subscriber, be sure to hit that subscribe button. Thank you once again for listening to Make Money Count.